What's up, you guys? It's your boy Henry coming back with some straight facts, slightly different format today. I'm filming this standing up, and with the whiteboard. So let's see how you guys enjoy the whiteboard. If you're new, my name's Henry and I teach people how to gain financial freedom and invest in the stock market. I've made a video on Apple before, and here's an update on Apple stock split and what's coming next. Most importantly, I'll cover the important dates if you are already a holder of Apple stock and my price estimates for the stock. So let's get into it. Apple split date is August 28th, 2020. And if you are a shareholder on this date, you are due split shares after the close of business. The ex date when they will be trading split is August 31st. This date is determined by the NASDAQ when Apple's common shares will trade at the new split adjusted price. Meaning, if you had one share, you will now have 4 shares. Yes, the option will be split as well, and that will be done for everyone. If you guys missed why Apple is having a split, here is the 1-minute reason stocks have splits, and I'm going to put the whiteboard to use and draw exactly what is happening. So here is Apple. A very nice apple pie worth $2 trillion. All right? It's worth $2 trillion. Now here is what's going to happen with your money after the date that I just mentioned. This apple pie right here is going to be cut into 4 pieces. Here we go. Here's the second pie. It looks bigger, but I promise you, it's not bigger. Boom, boom. So now we have 4 pieces, right, guys? So originally we had $2 trillion, and now we have 4 pieces. And guess how much this pie cost? This pie is actually also $2 trillion. So it's still $2 trillion and the value has not changed. So the value has no difference. However, now these pieces are smaller. Now there's 4, and you know what happens to smaller pieces, right? They are easier to eat. So investors are eating them up and buying more shares. So it sounds like I'm contradicting myself because I'm saying there is more demand and people will buy it. Yes, that's because a lot of people investing don't understand this. So don't be fooled by Wall Street and give Uncle Henry a like on the smash button. Now, if you guys are part of my Patreon or you saw this Apple video right here, then you're happy with my early call since looking at the returns. This week, Apple is up over 7%. And in fact, it has made Wall Street history this week by becoming the first US company to ever hit $2 trillion. Seems $2 trillion was also easy because Apple is at $2.14 trillion right now. Here is a few reasons I think Apple is a strong stock before I go into what price we can expect the stock to be after the split. Number 1, Apple's recent focus is shifting, and I've really noticed something that is game changer in the recent earnings report. Over the previous 4 quarters, services has generated revenue of nearly $52 billion, up 18% year over year, and now represents 19% of Apple's total revenue. With growth like this in a matter of a few years, the services business can be a $1 trillion valuation. And if you put a 20p on it, then we can already put the value on this part of Apple's business at $1 trillion. Guys, this is genius and why the stock isn't going anywhere. Apple has figured out that relying on iPhone sales alone will be a tough business model to keep up with. In fact, in recent years, iPhone sales have begun to plateau, and now Apple's services business, which encompasses everything from the App Store to licensing deals, is being positioned as its next big opportunity for revenue growth. More than ever, Apple wants to sell people ongoing monthly and yearly subscriptions for things that they can do on their phones. Number 2, I have to mention Warren Buffett. I really like to mention Warren because he was a big part of my research over at Drexel University, and him and Cathie Woods are my favorite investment managers. If you guys want an update on ARK Invest, please drop me a comment below so I can read and make another video for you. Well, Warren Buffett, who was the CEO of Berkshire Hathaway, began building a position in Apple over the past several years and now amounts to more than 250 million shares in his portfolio, representing more than 5% of Apple's outstanding stock. The investment has swelled in value to more than $120 billion and accounts for nearly 50% of Berkshire Hathaway's investment portfolio. Guys, one of the richest and smartest men is eating up the apple pie and he likes it. That matters. Buffett has said, I'd love to own 100% of Apple. So guys, that's 2 big reasons to own Apple stock if you don't already own it. All right, and reason number 3 is we're gonna look at the technical chart, and basically what I'm seeing is, guys, and this is really important, is not only is Apple above the moving average, and it is quite significantly above the moving average, I'm also looking at the volume. So recently the volume has really been driven upwards, and that is because of investors anticipating the split coming in the very near future. So that's happening on the 31st of August. So we're about 7 days away from Monday's trading day. So we have pretty much this week to, if you're interested in the stock, to purchase it before the split actually happens. Now, another thing that I'm really looking at is we talked about the moving average, and you guys know from my other videos, I like stocks that are above the moving average because that gives me a strong sense that there's a lot of investor demand. Now, when it comes to RSI, this is very interesting because a 20 RSI would mean oversold, and clearly Apple is not being sold at the moment. It just has a very strong uptrend. So it's not 20, 50 would be in the middle. It's actually 80, guys, and 80 is actually an indicator of being overbought. So it's actually the opposite. That's actually not a good thing. However, I do want to say this is an interesting situation because Apple has so much demand, and RSI is just one technical indicator to look at. You can see that Apple has actually never been under like 50. I don't see it under 50 at all. This is just barely 50. And then the rest of the time it's been 60s. So to be honest, the RSI actually doesn't look like the best indicator for Apple. However, it's an interesting indicator because it's consistently over 50 and now it's at 80. And that just, to me, I'm actually gonna look at it in sense of like reversing my mindset. This is such a strong stock right now that it's likely in the short term to continue swinging higher, because that's just what happens with stocks, because the stock market is ruled by investors who have FOMO, who have fear of missing out, and they operate in terms of, oh my goodness, the stock is going up, I need a piece of it. And it's true. I'm gonna give you guys another reason looking at the PE ratio, but quickly to wrap up with RSI, I'm actually not worried that it's an 80, and I can see it continuing to rise and stay at around 80 for a little bit, especially this week. I think it's gonna be a really hot week for Apple. Now, we'll see what happens, but I wouldn't worry about the 80, and the volume is massive. And the volume was a little bit higher around the announcement itself. So around the announcement, it was a little bit higher, but seriously, we're experiencing similar volume to when Apple actually had the stock split announcement. Now, okay, let's move on. We're going to move on to the PE ratio. And, number 3 was all these bullish indicators, but number 4 is looking at the relative valuation of Apple versus some of its peers. Now, I know Apple doesn't have a direct peer because, who else sells the amazing iPhone, and who else can really do that? I mean, there's only one competitor, aside from like Samsung, but I'm not going to be looking at Samsung. So we're going to be looking at analysis of FANG stocks, FANG being Facebook, Apple, Netflix, and Google. And funny enough, Google is now Alphabet. So we're going to be looking at that. Now, this is really important because it gives you a sense of, well, hey, is Apple expensive right now? And we know that, to do that, we want to look at other stocks like Facebook. So let's take a look at Facebook. Facebook's current PE is 23. And now this article from Investopedia might be, a little bit old. So let me just make sure what it actually is. No, so it's actually 34. Which is fine. It's actually a good thing because the picture I'm trying to paint is that Apple is less than its competitors. We can see here Apple is the lowest PE, literally the lowest from Facebook, Amazon, Netflix, and Google. So Apple is 19, it says here, but I bet it's higher. I know it's higher since it's been rising a lot. And again, we're just analyzing helpful articles. So PE is actually 37. So it's actually similar to Facebook. Interesting. Which is still fine because that means it's equal to its peers. But I know for a fact that if I go to Netflix stock, it's going to be, so it's 83. So I'm not surprised. Netflix is more, Facebook is equivalent to Apple. Okay, fine. Actually, Apple has run up quite a bit. Now let's take a look at Amazon stock. So if we look at Amazon stock, 126 PE. So again, Apple is less than Amazon, Apple is less than Netflix. And now let's go to Goog. So Google has two different stocks. It has Goog and Google, just different voting rights. So PE is 35 and Google, I mean, it's gonna be the same, 35. So Apple is actually more expensive than Google. So that's actually, it's interesting. I'm not so surprised because how old is this article now? This article was, wow, it's really old. But the point is, it doesn't really matter because in finance, what you really want to do, you want to understand the theories and the concepts, and then the market's always shifting and changing. So this is kind of what I would do. I would look at an article, I would see what has changed. It actually does seem like Apple has like significantly changed and is now on par with Facebook and Google, which is really interesting. Are they growing faster? Interesting to see what will happen this week. But I will say that in terms of Apple's PE ratio, it is now on par with Facebook and Google, and that's fine. I mean, they can both all continue to grow. There is obviously so many more positive reasons to invest in Apple, but I'm going to move forward and give you guys what I think Apple is worth. And spoiler alert, if you don't watch my video through and miss the value that I give later in my videos, then my estimate is $3 trillion in the next several months to a year. But first, I need to cover a few things that could go wrong for Apple because at the end of the day, we have to be prepared for anything to happen in the stock market. So let's take a look at the Apple's 6-month chart. Notice on March 23rd, it closed the day for a bottom of $224 per share. Apple has currently more than doubled in exactly 5 months. And my only concern is the company isn't growing as fast as Tesla, but is experiencing massive stock growth. If you guys want a good book to read, Intelligent Investor was written by Warren Buffett's mentor, link in my description, and he says that stocks become less risky when they fall and more risky when they rise. That means when a stock goes up a lot, it has a bigger potential for a pullback, but when will the pullback happen? Well, in my opinion, I'm not a licensed professional, but I don't think we will see a pullback for some time now. Investors are just too excited about Apple, and it's likely to continue killing it. So to conclude, I said the market cap could be $3 trillion in the next few months to a year estimated, but what could that translate to in current price? Well, that would be about $700 currently, or about $175 after the split. Apple has probably made the most millionaires over time, and I think it's a strong stock to add to your portfolio similar to what Warren Buffett is doing right now. I'm also estimating this stock will rise more before and after the stock split because demand to own a stable and growing brand like Apple is only continuing to grow. And I know I said grow a lot. They also have more cash than they know what to do with right now, so expect the dividend to continue to rise. And if you haven't watched my dividend analysis on Apple, click here to see a thorough analysis from exactly how I calculate future dividends and was taught when I worked on Wall Street. Drop me a comment, share the video, and check out Patreon if you want to support my work. Either way, thanks for watching. You guys are literally my family and what I work so hard for. Now, clearly, I'm shooting this at night. I don't know how the lighting is, but honestly, I love teaching and educating on this platform. I want to give back to others. I want the world to grow, and I want to grow along with you guys. So, thank you so much for watching. And I hope this video was helpful. Do give me a comment because I tried a different style of a video. I'm standing up, I'm having a whiteboard. I don't know how the lighting is, and I'm hoping that you guys got a lot of value from it. Here is my Insta handle. If you want to add me there, go ahead. I'll see you guys very soon. Be aggressive in learning, but be safe in investing. Give me that fist bump.